Hello and welcome to the week ahead from the Financial Times in London. Here's what we'll be watching in the coming days. Donald Trump's coronation. The Republican National Convention kicks off in Cleveland. Brexit fallout. Are there early signs the UK's decision to leave the European Union is hitting the European economy? And US earnings season in full swing. We'll be keeping an eye on how the big investment banks are performing. But first to Cleveland and the unlikely coronation of Donald Trump at the Republican Party National Convention, which kicks off on Monday. This time last year, Mr. Trump seemed little more than a political sideshow to the establishment players who were jockeying for the chance to take on Hillary Clinton. 12 months later, and Mr. Trump is the main event in Ohio. But his presence at the top of the ticket and his rejection of Republican orthodoxy on a range of issues has led many prominent Republicans to either refuse to speak at the convention or to cite scheduling conflicts to explain their absence. The convention is an event that usually draws the entire Republican Party. Our US reporter Neil Munchie has more.
There are a few things to know about the Republican National Convention. The first one is just how unexpected it is that we're going to witness the coronation of Donald Trump, a former reality TV star who, a year ago, no one expected to be the man taking on Hillary Clinton. The second is because it's Donald Trump, the eclectic nature of the speakers list, which includes billionaire Silicon Valley investor Peter Thiel, 4 of Trump's adult children, his wife, the head of the Ultimate Fighting Championship, and many others. Who it doesn't include are prominent Republicans, few of whom decided to make the trek to Cleveland. Though popular Ohio Governor John Kasich will be in town, he won't be attending, likely turned off by some of Trump's more incendiary rhetoric.
But despite the absence of several leading Republicans in Cleveland, Mr. Trump may have some momentum heading into the convention. A string of recent polls showed him narrowing Hillary Clinton's lead nationally and beating her in battleground states that'll be key to victory in November. Now, we've already seen the market fallout from the UK's decision to leave the EU. Next up, is real economic activity also slowing down? Well, this week we've got one of the first opportunities since the vote to try to gauge sentiment following last month's referendum results. One-off post-Brexit purchasing managers' indices for the UK are out on Friday. And on the same day, we've got PMIs for the Eurozone, Germany and France, which could provide insight into whether any Brexit fallout has spread to the continent. Here's our economics reporter, Gemma Tetlow.
Growth in the Eurozone was pretty strong in the first quarter and then slowed somewhat in the second quarter. The expectation is that the data coming out on Friday, which will be the first indication of activity in July since the UK's vote, will show that economic activity remained about the same in July as it was in June. However, it will be interesting to see whether we do see any Brexit fallout. The direct economic impact on the Eurozone should be relatively small for most of the countries, but there could be wider political consequences, and it'll be interesting to see whether that comes through in the data.
And finally, to US earnings season, which really gets underway this week, with the big investment banks under the spotlight. At the start of the year, many analysts thought bank earnings would be boosted in 2016 after the Federal Reserve raised interest rates last December. But they were counting on more rate increases throughout the year, and that hasn't happened. And with the Fed spooked by sluggish job growth and market turmoil, unleashed first by slumping oil prices and then by the UK's referendum on EU membership, many analysts have taken an axe to their forecasts. Last week, we had second quarter earnings from JP Morgan and Citi. This week, we've got Bank of America, Goldman Sachs and Morgan Stanley, as our investment banking correspondent Laura Noonan explains.
So Bank of America is the first bank out this week. They also have the distinction of having the lowest expectations to clear. Analysts expecting there a 24.9% fall in earnings per share versus a year earlier. And that's really as those tough industry conditions which we've been talking about have taken their toll. Tuesday should bring better news. Goldman Sachs expected to post a 50% increase in earnings per share. That's purely because they took a $1.45 billion charge in the second quarter of 2015 for various litigation matters, so they've got quite a soft comparison. Then we come to Wednesday, bad news again. Morgan Stanley expected to post a 23.7% fall in earnings per share year on year. Now, investors will be concerned about that, but they'll also be concerned about the future and Brexit and what that means for the banks in terms of lower earnings going forward.
And that's what the week ahead looks like from the Financial Times in London.